What's up, everybody? My name is Ashley Gunther, the creator of the CAP Growth Systems. And in this training, we're going to go over what you need to know about startup funding. First, let's go over the numbers. So, what is it that you need to qualify for startup funding? First, you need to be a U.S. citizen. You need to have income, whether that's through a W 2 or a 1099. You need to have qualifying personal credit. Usually, the lowest that will receive an approval is around a 550 credit score, and that's Experian, not Credit Karma. And you also need to have a qualifying bank account. If you're using something like a Chime, you'll find it quite difficult or nearly impossible to get a funding approval. So, what are some of the benefits of a startup loan? Why should you get one? Well, number one, you don't have to tap into your savings. Why not use other people's money? That's how the wealthy do it. Next, it's best if you borrow 6 months of costs. It is very important as you're growing your business to maximize your opportunity and your time. Having a business plan and understanding what the cost of operation will be will actually help you while you're going through the building stages with cash flow. If you're not really sure how to calculate your startup costs, we actually have a wonderful startup roadmap guide on calculating that. Check it out on our website. Next, most don't require collateral. So, what's wonderful about unsecured term loans, which are the most popular product for a startup, unsecured means you don't need any type of collateral. They're not going to ask for a down payment. They're not going to ask you for your car title. They're not going to ask for your real estate. Now, if you have some challenges on your credit, you may get a secured offer and they'll want your car title. Next, how much can you get? So the way that underwriters calculate how much you can get is they look at your AGI, your adjusted gross income. That's an item line on your tax return, and they compare it to your debt to income ratio. So how much debt do you actually have? When comparing that, that's the calculation that will determine how much money you can actually afford to borrow in a loan. So when is it a good idea to take out a startup loan? Well, number one, when you don't have the funds, maybe you don't have a savings account, maybe you don't have a 401k, it's okay to look into leveraging your credit in order to start or expand. If you're considering on quitting your job, this is the rule or this is the advice I would give you. Get the loan before you quit your job. If you quit your job and then you try to get a loan, it'll be very challenging for underwriters to get, you'll get a pre-approval, but you may not get funding because now you don't show that you have a steady or stable source of income. So if you are looking to quit your job to start your business, it's best to leverage the income that you have from that job, get you a loan, and then consider maybe even borrowing more to pad you a few months to ensure you can make payments and live comfortably. The third reason that it's a good idea is if you are opening a physical location. A lot of us underestimate the cost of running a brick and mortar location, and there will be a lot of unknown challenges that come up. So, of course, having more working capital available is always going to help you with the growth, scalability, and with emergencies. And next, it's a good idea if the ROI is there. It's always good to look at what are you investing in and how will it make you money. If you're investing in a big sign, that may not make you money that you can track easily, but it could be making you money because now people can see you from the road. So not everything you invest in will have a trackable ROI, but if you know it will show impact, then it is a good idea to invest in it. It's really by a case basis. When is it not a good time to get a startup loan? So if you're unsure where to start, if you're a person perhaps a little bit desperate or you're looking to improve your situation and you're anxious and you want to just kind of throw yourself into it, let's pause a little bit. Let's take our time. Okay. There will always be opportunities and options. So let's work with an expert to evaluate your situation and figure out what you're looking to do. Are you looking to invest money in something passive to where you don't have to manage it at all? Or are you looking for something where you got to roll up your sleeves and work at it every day? That's an important question to figure out. Number two, if you aren't able to get approved for enough. So let's say you have an opportunity to purchase a business for a franchise, let's say for $15,000, and you can only get 5 grand. And that's the only amount you have. Taking out that 5 grand loan probably won't help you. So you have to look at how much money you have available, how much, uh, in what ways you can invest that money to yield the maximum amount. And that's why it's always important to work with an expert. An expert will help you navigate through this. You won't have to do it on your own. If you're working with an amateur or a broker, they're not going to be able to help you navigate through this because they don't know any better themselves. Next, if you haven't calculated your true needs, so I mentioned this earlier, if you don't know your actual cost of operating, you need to sit down and map that out. Oftentimes, you don't know where to do that. You can go to Google for suggestions, or you can head to our website under resources and download our free guide. We have several resources on there for anything between improving your personal credit, establishing business credit, and it's all free. So go ahead and check the website and check out the resources section. And next, when the ROI isn't there, if you're borrowing 10K and you may only make 5K, that doesn't make sense. So what are you investing in? What are you going to take this money? What are you going to do with this money? If the ROI isn't there, you need to really think about, will it help you in the long term if the ROI isn't there in the short term? What can an offer look like? So for unsecured or secured loans, it is going to look at several factors. Your credit score, your credit history, and your income are really the main ones. So what can your approval amount look like? Well, it can be anywhere from $1,500 to $500,000. Your term can be anywhere from 6 months to 72 months. And your rates, they can start as low as 4.99%. And yes, they can get up to the subprime amounts of 45% or more. That's for people in the mid 500s, people with light history, or people with some challenges. What are some ways that you can save more money? So yeah, you're getting this loan, but what are some ways that you can reduce the cost of this loan so you can maximize your ROI even more? Well, number one, you can select a shorter term. Typically, a lender will give you several options. And let's say you're getting a 3 or a 5 year option. Your 3 year option will come with a lower interest rate, but your payments will be higher because it's a shorter term. So take a look at that monthly payment, see if that's something you can afford and that you're comfortable with. And then as you're going along, again, if you're working with an expert, they'll come up with a plan on the best practices to pay it off. If you're not working with someone, you're going to be kind of left in the dust if they're an amateur. So again, paying your balance off early is always a great way to save. So imagine you select the 5 year term, but you pay it off in 2 years. You're going to save 3 years worth of interest payments. Next, you want to work with the same company. Creating long lasting relationships are key in business. When you find an expert that understands your goals, as you grow, they're going to understand best practices and other things and other strategies they can add to help you grow. So it's always wonderful to create these long-term lasting relationships with experts that can get the job done. Next, you want to improve your credit. Trust me when I say this, and I used to not believe it. Your credit will always matter, and it matters in everything. So listen, even if you have a 730 credit score, you can still improve it. And when you get up into the 800s, you're going to see a whole new world of even different offers. So there's levels to this. We can all improve every day. Just because you don't have negatives on your account doesn't mean you can't afford to improve your credit score. So improve your credit, and that will ensure that you're getting better rates every single time. And make sure your business is set up right. Yeah, we're talking about a startup loan, right? You don't need your LLC. You don't need a business bank account to get a startup loan. But it's best that you get those things set up and accomplished so that you maximize the possibility of success in your startup. Now, the CAP growth system has a suggested roadmap for every program. In this video, we're in every video like this, you're going to see the suggested part, and this is wonderful. So this is the way that our experts suggest that you take a startup loan and what you do along the way. So first, you want to get that startup loan and you want to invest to make money. You want to make sure what you're investing in, especially in the early days, is yielding you an ROI. Your LLC cost, that's not going to yield you an ROI, but you need that LLC in order to open a business bank account, get you a merchant account, and save you on fees. So it makes sense. Next, like we said before, work on your personal credit score. As you begin your business journey and you're opened up as a legit business, you're going to realize that better credit gets you better payments and better programs. You don't want to be stuck in the MCA rut, as we call it. So working on your personal credit always. Next, you want to work on your cash flow. You're just starting, so you want to maximize every opportunity, especially in the early days, to grow your business. Getting a better payment solution set up is going to help you save on fees. It's going to strengthen and level out your cash flow. Setting up things like offering payment plans or financing for higher ticket items is also great. And then learning new skills like organic marketing can really set you apart from the rest. Next, you want to grow your business credit. As a startup, you want to establish this. You don't have to pay thousands of dollars to establish your business credit. In fact, head over to our website, go to the resources area and click on our business credit guide, completely free guide that's going to get you set up and started on tier one. And next, you want to consolidate or pay it off. Let's say you get a 3 or 5 year unsecured term loan. By the time you're a year in business, you're going to have that business established the right way if you're working with an expert like us. So you're going to be able to get a business loan and consolidate that or pay it off completely. Once it's paid off, we can look at other programs like lines of credit. And that way you can save along the way. And with everything you've done so far, you'll qualify for that line of credit by the time when that time comes. Next, how can you contact us? Listen, your growth is our business at the CapGrow Systems marketplace. We're really looking at ways that we can help you improve. Okay, this is one of those ways. So you can go ahead and contact us. You can shoot me an email or you can visit our website at capfunding.com. Again, we have a lot of great resources as well that are free that will help you on your journey. We wish you great luck as a startup. And if you have any other questions, go ahead and comment below and one of our experts will go ahead and answer. We're excited to help you grow and see what the future has in hold for you.